Mr. Sunil Chari, Managing Director of Rossari Biotech. The company recently reported its numbers as well. The company, remember, manufactures home, personal care, performance chemicals, manufactures textile specialty chemicals. It currently manufactures over 100 products for the animal health and nutrition space as well. They have R&D facilities in Gujarat and in Maharashtra. They have two manufacturing locations, Silvassa and Dahej in Gujarat as well. Of the earnings, if we speak specifically, we did see the net sales coming in at 410 odd crore rupees in the June quarter. That was on a year-on-year a dip by about 5.5%. The quarterly net profit, however, was up by about 2% at 29.22 crores. The EBITDA stands at 59.93 crores in June, up by 2.5% as well. Sir, I wanted to understand or begin by understanding from you the demand scenario and performance across various segments when we talk about textile, animal health. How are things really looking? The numbers have been largely stable or flattish, no substantial up move right there. But if you could talk about the demand and the various sectoral performances.
So if you see, the raw material prices have started coming down and they are at practically pre-COVID levels. So if our total sales remain constant, that means the volume has gone up. So in fact, our volumes have gone up by 10 to 20% across segments. Textiles, textiles we saw a good quarter in the last quarter, and we see stable demand from export markets for our customers. HPPC, which is the largest segment we have 68% sales now, and we see for this coming year a very good demand across all segments.
Okay.
Mr. Chari, welcome to Business Today Television. It's such a pleasure to host you, sir. Let's look at your stock performance, and that somehow tells the entire story of the chemical space. The company came up with an IPO somewhere in the July of 2020, and the IPO price was somewhere like 425 rupees per share. You've seen glorious days, 1600 somewhere in November of 2021, and then it's the specialty chemical space, the prices that fell off the cliff. You've also talked about raw material prices now at pre-COVID levels. That obviously means expansion of margin. In the time that's lapsed over the last 1 odd year, what is the fresh capacity that you've built, and where is that capacity aimed at? Which specific part of your product profile will see higher volumes, sir?
So, if you see Rossari, when we launched our IPO in July 2020, in the previous financial year, we were March 20, we were about 600 crores and about 70-80 crores of EBITDA. Today we are at 225 crores of EBITDA last year, and this quarter it was about 59 crores. So practically we are at 3 times of EBITDA compared to what we were 3 years ago. Even sales, we were 1600 crores, and we are 1600 crores last year, and we were 600 crores in 2020. Which says that 3 times EBITDA we have grown, and 3 times sales we have grown. The biggest segment which we see is HPPC. The home personal care and performance chemicals is doing extremely well. The Unitop and the TriStar acquisitions have practically done very good for Rossari. We have doubled our sales. When we thought of acquiring 2 years back, the board said many acquisitions failed, and we took a lot of care, we took a lot of training, so that we do not have cultural shocks for the companies we acquire, and we handled them well, and we use our entire network to bring synergy. And we brought a lot of customers for these 2 acquisitions, wherein Unitop, which was 300 crores in March 21, should be more than double this year. And TriStar was about 100 crores. It is again, we are seeing it to double in. So in 2 years, we have doubled both acquisitions. The focus area remains home personal care, agro surfactants, care ingredients and actives like phenoxyethanol and phenoxypropanol. We have launched a lot of products now which can go into different industries, but our core chemistries remain surfactant, acrylic, enzyme, and silicones. If you see in the last 4 quarters, consistently we have increased our gross margins and EBITDA margins, and we see a good future for us in the Indian specialty chemical industry.
I'm glad you talked about margins, and I was coming to that. If you could get us an insight on how have the raw material prices panned out through this quarter. If there has been any decline, have the margins got any support? What is the outlook on the margins? And, by when do you really see getting back to the peak margins that you used to report, about 17, 18 odd %?
So, if you heard our last earnings call, we now are, trying to get the capacity utilization to a very higher level. When we went for the acquisitions, they were at 50, 60, 70% capacity utilization. We are practically at both Unitop and Tristar at 100% capacity utilization. We are doing the same thing even for Rossari now. There was a question on, capacity utilization. We may go for some capacity expansion at both Unitop and Tristar because we are running at full capacity in the last few months. In terms of margins, if you see, our EBITDA margins have grown, consistently every quarter. Even if it is just 2-3%, they have grown consistently. When the entire specialty chemical industry was in trouble, we are increasing our amount of money. So we are looking at what is the amount of money we earn every quarter, and the focus is to increase from the last quarter to the next quarter, some increase in the amount, because that will reflect in the PE multiple.
Okay, any targets for yourself that you have set for FY24? Can we see 15-16% odd?
Not in terms of percentage of sales, but it will be in the amount. We will see definitely a 10-20% growth in EBITDA margins compared to what we earned last year.
Okay. So, Mr. Chari, I want to understand, since you did talk about that you are, looking at expanding your capacities going forward, since your capacities are already running at 100% odd now, what is the cost that you're going to take? Is there going to be a fundraise that you would be planning to add these capacities going forward? What is the kind of investment that you're planning to add these capacities, and by when?
So we have enough cash flows and internal accruals, but we'll take a small amount of debt for any expansion because we, at 31st March 2023, we were a zero debt company. We should have some debt, and the board always keeps 2x of EBITDA as a conservative debt boundary. So we'll never cross that boundary, but we'll have small debt to take up the expansion.
Right. Let's focus on margin a bit more. Sakshi asked a wonderful question about expectations on the margin front. And if you see details, Sakshi, in March 2022, the net margin for Rossari was 5.16. In June 23, it's 7.1. And the trajectory in the last 5-6 quarters has been only upwards. Ditto for EBIT margin. March 22, it was 8.2. It's 10.63 now. Let's hope this trajectory continues, or even if you hold the margin at these levels, the market will really appreciate, Mr. Chari. Tell us, where is the demand coming from? Raw material costs have gone down. Top line is increasing, so volume is up. Which are the 2 or 3 sectors you feel are showing maximum traction over the next 2-3 quarters? Mr. Chari.
So agro has been very strong for us in the last quarter. Traditionally, the first 2 quarters, agro is very strong because of the monsoon season. So we see agro as a good, not only for India, but also for exports. Home personal care, which is, our main focus area, that we see steady demand in India, but we also see exports picking up in a very, very good way. So exports for us is a focus area for us to grow in. Textiles, if you're able to maintain this, we are happy. And animal health and nutrition should be an area to grow. We have institutional cleaning chemicals where we have 100% subsidiary called Rossari. That is the area which is into cleaning, hygiene, disinfection. That is the area we think that will grow the fastest. It is part of the HPPC group.
Okay.
Right. Mr. Chari, a lot of fresh capacity. Yes, Sakshi, go ahead, please.
Okay. I wanted to also take your view on exports, Mr. Chari, and especially when we talk about the current global situation, what is the current trend in exports that you're looking at? What portion of revenues comes from exports, and what is the outlook there?
So if you see, last year we did about 380 crores of exports from 1600 crores. So it was 20% plus. And we see this as a percentage growing also. In spite of fall in finished goods prices, we think that we will cross last year's exports value of 380 crores. Our major export markets, especially for personal care actives, is Europe and for agro and home personal care is US, Latin America, and South America. We see good demands in all these markets.
Okay. Well, many thanks, Mr. Chari, for being with us on the show and discussing all these insights about your quarterly earnings. All the very best.
If you like the video, do like, comment, share, and subscribe.